If you've been thinking about selling or buying a house in 2023, then this video is for you. Let's talk about interest rates and how the third worst date in 20 years can affect your real estate future plans. Hi, my name is Betty Gonzalez with the XP Realty and Doral Homes by Betty Gonzalez. And today we're going to talk about the recent news regarding mortgage rates. More specifically, I'll be discussing how we experienced the third worst day in mortgage rates in over 20 years. Now, if you're not aware, mortgage rates are one of the key drivers of the housing market. These rates directly impact the interest rates on your home loan, which naturally impacts the borrowing costs of home buyers. That said, with the recent surge in mortgage rates, many individuals are becoming increasingly concerned about how these changes may impact the real estate markets. So let's dive in a little deeper into the details. Welcome to my channel where I let you know everything that you need to know about living in South Florida, especially right here in Doral. So if this is something that interests you, consider subscribing. I love hearing from you, so if you have any questions or you're ready to make a move, feel free to grab my information in the description below. Now back to the video. As I already mentioned, mortgage rates reach multi-decade highs. And just last week, these rates increased just a little bit further, making it a third worst day in mortgage rates in over 20 years. As many of you already know, this increase in mortgage rates is primarily due to the movement in the underlying bond market. And for those of you who aren't familiar with the bond market, think of it as a place where financial institutions can borrow money when there is a perceived risk to the economy, such as inflation or uncertain political circumstances. Investors become less likely to invest in the bond market, forcing borrowing costs to increase. The same is true for the mortgage market. When investors become less likely to invest in mortgage-backed securities, borrowing costs for home buyers increase, leading to higher mortgage rates. So what does that mean for current and potential home buyers? Essentially, it means that you can expect to see higher interest rates on your home loan. This may make it more difficult for those wanting to enter the housing market, and for those who already own a home, may make it more expensive for those looking to refinance their existing mortgage. And further, higher interest rates may lead to a decrease in home buying demand, which can also result in a decreased home prices. Now, you may be wondering, when can we expect to see this trend to stop? Well, according to traders and experts, it is likely that interest rates will continue to increase until the migration stops. However, this inflection point could be this week, next month, or even few months from now. Of course, some individuals may take a more pessimistic approach and predict that it could take years for this trend to reverse. However, I say it is unlikely unless we experience a substantial correction lasting long enough to provide meaningful relief. While the current trend in mortgage rates may seem concerning, it is important to remember that the real estate market has always been subject to fluctuations. And while we can't predict the future with certainty, it is always a good idea to monitor the situation and make informed decisions based on current market conditions. That's it for today's video, guys. If you found this content helpful, please don't forget to like and subscribe to my channel for more updates on the real estate market. Thanks for watching, and remember, I'm Betty Gonzalez, serving the military community of South Florida, from serving our country to serving you. See you in the next video. See you guys. Bye.